Look, I've blown hundreds of thousands of dollars chasing, that 100x return coin. Then I figured out a much simpler way to spot tokens that actually have a real shot at growth. Let me break it down for you. First, let me ask you something. When you first got into crypto, I bet you were hunting for coins that were cheap. Where are the cheap coins at, man? I got buy coins less than a penny. Because when they go up to $1, I'm going to be rich. When they go up to Bitcoin's price, I'm going to be rich. I bet some of you are still holding these coins today, even though they've disappointed you harder than your ex and are basically at zero now. And honestly, look, I don't blame you. We've all been there. We've all done that, man. Until bam, some random guy online tells you the truth. Price is a distraction. Tokenomics, market caps, that's the kind of stuff that really matters. So forget the actual individual price tag. A token priced at 0.001 cents isn't always cheap. And $100 isn't always expensive. What really matters is how the supply is structured, who holds it, and whether the team is actually aligned with investors, which is increasingly rare, I feel, in crypto, but there are some good teams out there who do want you to win as well. If insiders are locked in for years and not dumping at the first sign of weakness, generally a good sign. But if the supply is basically infinite, and the only thing keeping this coin alive is just, bullshit narrative and hype, they're just playing hot potato. Now, here's an interesting example. Take Shiba Inu as one we can look at. On paper, it looks super cheap, man. It costs just 0.000012 cents. You might think, man, if I throw in $100 and it goes to $1, I'm gonna be a billionaire, man. Genius. Here's the reality check. Shiba Inu's circulating supply is 589 trillion tokens. That means even at today's tiny price, the market cap is already an eye-watering $7 billion for what's really last cycle's meme that a lot of people made a lot of money on by getting in very early, turning thousands of dollars into tens, even hundreds of millions of dollars. You're not gonna do that buying it today. Okay, in fact, I feel like it's an old hat meme. I'm surprised it's still worth $7 billion. Now, if Shiba actually reached $1 per token, the market cap wouldn't just be big, it would be over $589 trillion. For perspective, that's more than 5 times the entire global stock market. It's not just unlikely, it's a statistical impossibility. And to be fair, Shiba never promised the world. It started as just a picture of an effing dog and built a strong community around that. And they did some other BS later on, DeFi, whatever, none of which has really been super successful, because it's just a dog picture, man. Fact is a fact, though. So instead of just looking at the price, ask questions. Well, what is going to get this thing to actually go up in price? Who are the other buyers going to be? Why should it go up in price? What's the maximum supply of the token? Is it hard capped like Bitcoin? What's the current market cap? Is a 10x or even 100x actually realistic from these levels? Well, if 100x would surpass the US debt, then you probably have a better chance of seeing a flying unicorn. Here's another one to look at. Let's look at the hot new coin in the market, Plasma. Now on paper, looks pretty interesting, right? Stable coin play. It's got, Tether guy behind it. Market cap's still small enough that 10x would be realistic. Team tokens, they're vesting for a while. The price has dropped about 50% from recent highs, which is pretty normal for new launches, to be honest. And there were a variety of rumors flying around, rumors which of course have been denied by the founders. Now, whether any of that's true or not, it does highlight an important part of the framework. Tokenomics need to be backed by transparency and trust. And I'm not putting anything bad on the Plasma guys, I'm just using a recent example of something that's happened in the market. Another example of potential undervalued coin is Linea. Its current price is just below 3 cents, which at first glance is higher than Shiba Inu's. So seems expensive, maybe. It has a max supply of 72 billion coins and a market cap of around $400 million circulating right now. Do the math, you'd only need about $3.6 billion in market cap expansion to get a 10x, which feels like a relatively realistic target. Another stablecoin play, STBL. We're talking about some of the hot coins in the market right now, giving you examples of how to think about these, right? This is a decentralized stablecoin protocol created by Tether co-founder. It's $130 million market cap, making a 10x potentially more realistic. But then you look and see the fully diluted valuations like $4 billion or something. So only 5% of the tokens are currently circulating. So that may not matter so much over the next few months, but over the next year or two, you're going to feel that if you're trying to hold on to that for the long term. Part of studying tokenomics is also checking for factors that will actually bring value to the token, like burn mechanisms or good revenue sharing, okay? Things that can reduce supply and boost long-term value. Take Apex, for instance, the Bybit decentralized exchange. After its final tranche burn in October 2024, the total supply was cut down to 500 million tokens. On top of that, Apex launched a buyback program starting with a $12 million commitment. Beginning October 2025, 50% of daily revenue, ramping up to as high as 90%, will be used to repurchase tokens weekly from the open market and to burn them. All tokens are sent to a public on-chain address, locked permanently, ensuring full transparency and ongoing scarcity. Linea, for example, also has a burn mechanism. In fact, it's got a dual burn mechanism, which is very interesting. So of any transaction fees collected, 20% is used to burn Ethereum, which is actually probably the first layer 2 on Ethereum that's actually aligned somehow with Ethereum and gives a fuck about something happening back on Ethereum. Thank you, Linea. That's nice. Well, the remaining 80% is used to buy back and burn the Linea tokens. Now, there's not a whole shit ton of fee revenue on Linea right now, but maybe the Swift partnership brings in more money and they get more attention and we do get higher revenue for the chain. Now, this, if it's successful, reduces the supply of both Ethereum and Linea, creating deflationary pressure that grows stronger as network activity increases. By tying the burn directly to usage, Linea reinforces the value of its token in a way that scales with adoption. Now, before we get into some of these next factors, question for you. Will you continue trading on platforms that do not reward you? Or will you upgrade to an OG exchange, Femex, that's putting money back in your pockets? Well, guess what? Femex delivers everything that serious traders want. Deep liquidity, low fees, fast execution, and worldwide availability, meaning it's available to anyone, anywhere. You may need a VPN in some cases, but it's worth the extra button click. For a limited time, when you make your first deposit of $5,000 or more, exclusive using this link right down here, you're going to get $1,000 back. That's one of the craziest deals I've seen in a long time. Put $5,000 in, get $1,000 back. That's crazy. And it doesn't stop there. This month, new and existing users signing up through this link right down here can also earn up to 1 Ethereum in rewards worth over $4,000. So will you take advantage of this opportunity and will you make the switch today over to Femex? Link down below. Your capital deserves better. Look, let's get back to this. Looking at tokenomics is important, but it's just one part of a robust framework. Speculating on coins based on hype can also be fun, but sooner or later, utility decides whether a token has real staying power and is not just a flash in the pan that gets talked about for a week and then forgotten forever. The real question to ask is, what value does this asset actually provide? Let's circle back to Linea. Okay, we're just using this example. I don't own any. If you want to see my portfolio disclosures, it's always down below. Okay, it is on a short list of things I might buy, so maybe in the future I'll buy it. But anyway, now Linea is backed by Consensus, the main Ethereum development studio, and backed by OG Ethereum investor Joe Lubin. Recently, they were selected by Swift to power a pilot blockchain-based payment settlement platform involving over 30 major banks. By enabling faster 24/7 cross-border payments using scalable blockchain technology, Linea shows that its token isn't just for speculation, it has a functional role in the future of finance. DEXs and even perpetual DEXs are finally getting the recognition that they deserve. These platforms let users trade directly from their wallets without relying on a central authority, giving more control and more self-custody. Recently, the native tokens of leading DEX protocols jumped massively. Many of them are up hundreds of % in the last few weeks, okay? In September, we saw huge moves, and trading volumes on DEXs are steadily rising relative to centralized exchanges, showing that users are increasingly valuing the utility of being able to trade on chain. Tokens like Aster, Apex, and PancakeSwap, which is not a perp DEX, but still on chain trading, Orderly Network, stuff like this have seen really big moves. Platforms becoming easier to use and more traders seeking self-custody. It's clear that utility should be one of the things we should be looking out for. Well, the perp DEXs are a great example. They do buybacks. They give people what they want, which is trading on chain, right? The tokenomics are aligned with long-term holders. But there's another underrated factor that most people miss: Mindshare. See, it's not just about who's using the tech. I've seen a lot of great tech in my years in crypto. I've been investing since 2017. I've seen a lot of great shit and a lot of great ideas that have all flopped on their face because nobody gave a shit about it. It's not just about the tech, okay? But it's about who's using it, who's talking it, are they reaching a certain point in the market where they're unignorable. Projects that dominate conversations tend to attract more builders, more liquidity, more attention, which often translates into stronger price action later on. To spot them, you can use tools like Kaito, Sharp AI, Edge Tech, Cookie, stuff like this. Things that track social sentiment and mentions. CoinGecko's trending list also gives you some quick hints of what's hot or not right now. And of course, crypto Twitter is still the fastest way to see what's going on in the market and get hot takes on all kinds of stuff. If a coin keeps showing up across different circles, chances are narrative momentum is forming. Now, you may have missed the early part of the move, but you can still catch the meat of the move in that situation. In crypto, narratives move markets, and narratives change quick, but some are very much recurring, right? For example, buyback coins, pump and hyperliquid and stuff like that. So look, we've covered a lot, tokenomics, utility buzz, and it's really just the basics, right? There's a lot more if you dig deeper, which, by the way, we discuss daily in our Discord channel. Link down below, go check it out. But going back, one of the most underrated factors, of course, is a strong community. Look at Pengu, just a cute picture of a penguin linked to a coin, okay? But its community is considered one of the strongest in crypto, right up there with the most dedicated supporters of OG dino coins like Cardano and XRP. And here's the kicker. Pudgy Penguin's project was abandoned by its developers, but instead of giving up, the community actually banded together and took it over. It doesn't get more dedicated than that. A strong or even cultish community acts as unpaid ambassadors, doing whatever it takes to make sure that their project succeeds. Don't fade the cults. Don't fade the strong communities. Look, end of the day, cheap isn't good. Expensive isn't bad. What matters is value, okay? And that's rare in crypto. Most of the stuff is absolute dog shit, to be clear. But a strong project has good tokenomics that makes sense, real utility for the token. There's real reasons that this will be bought off the market by somebody, and a community that refuses to let it die. When you add in transparency and the deflationary mechanics or buybacks or revenue sharing, you've got some ingredients for something that can not just thrive, but even survive into future cycles. Not that you want to hold anything to the bear market, you're selling all that shit. But anyway, if you ignore all this stuff, you're just gambling on numbers that look small on a screen. And what's worse is that the numbers can still get smaller. Just because something's cheap or has a low market cap now doesn't mean it's goodbye. Do your homework in tokenomics, be willing to build conviction into something. Because without conviction, if you're just borrowing conviction from some rando fuck on the internet, you're not going to do okay? You have to have your own conviction. This is a relentless, unforgiving market where people who have more information than you, higher risk tolerance than you, are just stupider than you, make shit tons of money, okay? You have to be willing to take the risk, but take smart risks. Have conviction in something. Thanks for watching.